All right, everyone, it's Thursday, July 1st, and I am really excited today because it is the first of the month. And whenever the first of the month rolls around, what I like to do is go into my investing portfolio and to start selling some options to generate extra income. Uh, a lot of folks don't know exactly what that entails, although they may have heard me refer to it now and again. But let me kind of walk you through my process with one of my portfolios. So I've got holdings at Schwab and Fidelity and Interactive Brokers and others, and they're all very similar, but the interface is slightly different. But basically, the strategy is that I have several long positions at these different accounts. And what I would do is on the long positions, I would go ahead and write cover calls against them, which is pretty conservative, especially if you set the right strike price. And I'll show you my thinking and process through some of those. And then, as you know, if you've been watching, I have a rather large cash position in some of my accounts. And rather than just let it sit there and earn, almost nothing, it's like 0.01% on cash balances. What I like to do is use that cash and sell cash secured puts just to earn a little bit of extra income. So typically, what I like to do is use the Nasdaq 100 Trust, so QQQ, just because there's a lot of volume in that. And I would sell some cash secured puts that are maybe 4 to 5% below the current trading price. And these are all monthly options, and I would collect a pretty healthy premium for it. And if the Nasdaq Trust goes down by more than 5% in a month, I really don't care because I'm one, collecting the premium, and two, I would just turn into a long-term holder of the Nasdaq if it were to go down that much in a month. So it's just a way to get extra premium on something that I wouldn't mind holding at a much lower price than what it's currently trading at. All right. So with that in mind, let's go into the computer and see how we do this. All right, we will start by looking at the options chain for XLE, the energy select sector. And I'm interested in cover calls, so I'll click on calls. And I'm looking at the July 30 expiration. So what I'm going to look at is all of the price range for the July 30 call. And I know that for XLE, I have about 7,300 shares, actually almost 7,400. So I'm going to sell 73 contracts because each contract is 100 shares. And what I like to do is I like to go about 7% above the current trading price for my strike price. So trading at 55.14, 7% above that's about 59. So I'm going to click on trade here for cover call options July 30th at $59 strike price. And what I'm going to do is I am going to sell to open, and I'm going to put 73 contracts. So just to review everything, so right here my position is 73.38 shares. So I can sell 73 contracts. Bid and ask is 52 to 55, so I'm going to do a limit price of 53 right at the mid. And that's going to get me $3,800. So let's go ahead and review this. Sell to open, July 30, $59 cover call. All right, this looks good, so I'm going to place the order. And I'm done. All right, so the next one we're going to do is a cash secure put on the NASDAQ 100 Trust. So I want to select the July 30 strike expiration date. So have that selected. For the strike, I'm going to do all prices. And I'm going to try to go about, I don't know, call it 4% lower than what it's currently trading at. So if it's trading at 33.5364, so $353.64, 4% lower than that is going to get me to about 339.50. So what I'm looking for is 339.50 and see what that's trading at. And I really don't have 339.50, but I have 340 and 339. And I think that what I like to do is sell some of the puts for, let's call it 340. Okay, that's almost 4% down. This will allow me to buy the NASDAQ at 340, even though it's trading at 353 by the end of the month. And someone's going to pay me almost $3 a share to do it. So I'm going to select this. And I think that what I'd like to do is maybe set aside about $170,000 or so to do this. So that's going to be around 500 shares. The bid is 287 to 289. I'm going to ask 288. Review the order. Sell to open. 5 contracts of NASDAQ Trust. July 30 expiration with a strike price of 340. And this is on a cash secure put. So I need to have about 170, let me double check the math here, 500 shares, 340, $170,000 to secure this cash secure put. And I have plenty, so I'm going to go ahead and place this trade. And there we go. And just got executed, so that's awesome. All right, so I've showed you 2 of my trades for options. One is a cover call and the other is a cash secure put. And after executing some more trades on my Schwab account, this is what my current position looks like. So you can see that on the monthly options, I have these 4 positions that were executed today with an expiration date of July 30th. The only oddball is this REM security. It's a REIT. It trades more on the traditional calendar, which is the 3rd Friday of every month. But that's only worth like $200, so we can discount that. So what I did was I collected about $5,700 in options premium for the positions that are in my Schwab account. Now I'm going to have to go and rinse and repeat this at Fidelity and Interactive Brokers and all the other places I have accounts, but kind of want to show you where I stand after these trades have executed. Now you may look at that and say, okay, that's great. You got $5,700 for selling these options in July. What does that actually mean? So I put it all together on a spreadsheet just to show you for the position on my Schwab account how much I am going to earn potentially based on the investments. So for the cover calls, I am long on these 3 positions, and the total value as of basically right now for those 3 is a little over $500,000. And then I have some cash in the Schwab account, of which I'm devoting about $170,000 to write a cash secure put on the NASDAQ Trust. So this is the value kind of the investment, the value invested, so to speak. And against those, I wrote these cover calls and cash secure puts, and I've collected these premiums over here. So these are the premiums that are after commissions. So when I add them all up for July, I'm collecting about $5,700, which I mentioned previously. And the value of the investment I have for these positions in Schwab is about $685,000. So if we were to annualize this return, it works out to be pretty much exactly 10%. So I'm just taking this 5,700 times 12, dividing it by the value I have invested. Now, this is pretty secure because when I'm writing my covered calls, I'm setting the price way above the current trading price, so it's out of the money. And it's roughly, you know, my rule of thumb is that I would set a price that's anywhere from, call it 6 to 10% above the current trading price, depending on a variety of factors. Maybe it's you know, volatility, how much interest people are having in in the underlying stock, but that's usually what I do. On the downside, for a cash secure put, I'm usually setting my price at maybe 4 to 5% below current trading prices. What I found is that when you set it at 4 to 5%, you're going to get a lot of premium paid for that because people are buying it as an insurance. And your risk of it, getting hit there is not that great on a cash secure put. Same thing on the cover call. My only risk is that, the positions have this major run up in a month's time, right? And the securities are called away from me. In which case, I've collected my premiums, but I don't get any appreciation above the strike price. What's the chance that some of these securities are going to run up 7% to 10% a month? Very small. So I'm not really worried at all. And except for the gold holding, I mean, they all paid a pretty decent dividend as well. So what I'm able to do with this is that I am augmenting the dividends that I'm getting from these stocks. I am getting some cash flow for any cash position I'm holding. And at the same time, for the positions where I'm long, I'm also enjoying price appreciation. Anyways, that is hopefully a useful tutorial on writing cover calls and cash secure puts to generate some income. I'll put some more up later. See ya.